And it's the midweek trade right here in Lagos, Nigeria. Great to have you. Good morning, good evening, wherever in the world you might be watching from. Let's get to the top stories that get you ready for that trade now. Starting with oil prices, we've seen oil prices slid after Russia agreed to U.S. President Donald Trump's proposal that Moscow and Kyiv stop attacking each other's energy infrastructure temporarily, which could lead to more Russian oil entering global markets and definitely oversupply. Definitely that takes the asset class lower in price. $70.44 a barrel, 0.2% down. That's what we're seeing for Brent. And we see WTI losing that $67 per barrel level, also down 0.2%. And definitely might be tending towards a negative week there for the oil market if this continues. But this midweek, anything can change by tomorrow. To other stories now, in the 2023 fiscal year, the Bureau of Public Procurement, they said that to various ministries and departments and agencies, that's the no objection certificates approving projects valued at over 2.94 trillion naira. The agency's annual report highlights its efforts to ensure transparency, efficiency, and accountability in public procurement. The report also revealed that BPP's interventions led to an estimated 58.65 billion naira, that's approximately $56 million in savings through cost reductions on reviewed contracts. It noted the Bureau issued 395 certificates of no objection to MDAs, observed 8 bid openings out of 12 invitations, and ensured total compliance with the Public Procurement Act 2007. Additionally, no defective advertisements were placed by MDAs, thanks to the proactive measures taken by the Bureau, which reviewed 592 draft advertisements. The BPP's oversight resulted in significant cost savings of 58.65 billion naira across various projects throughout 2023. The Nigeria's public procurement process, a no objection certificate confirms that a project has met all legal and procedural requirements under the Public Procurement Act of 2007. And the Federal Inland Revenue Service is committed to strengthening tax policy and capacity building initiatives across West Africa. Dr. Zach Adedeji, FIRS Executive Chairman, made this pledge at the West Africa Tax Administration Forum in Abuja. He emphasized the importance of tax policy in fostering sustainable economic growth and improving domestic resource mobilization. Addressing attendees, including country correspondents and heads of corporate communications, Mr. Adedeji highlighted their role in shaping narratives and promoting voluntary compliance. He encouraged participants to exchange ideas and adopt best practices to enhance tax administration in their countries. And global goods trade remained stable in the fourth quarter of 2024 and is expected to continue growing into the first quarter of 2025, with the WTO goods trade barometer rising slightly to 102.8 points, up from 102.7 points in December. Despite this stability, increased trade policy uncertainty and the potential for new tariffs could impact trade in the medium term. The goods trade barometer, a composite leading indicator, provides real-time insights into the direction of global merchandise trade, with values above 100 indicating growth above trend and values below 100 signaling a potential decline. And the Dangote Group has added a new feather to its investments portfolio in Ogun State, southwest Nigeria, as a 6 million metric ton cement factory in Ewekoro local area has birthed in the Gateway State. President of the Dangote Group, Haji Aliko Dangote, says the investment drive is aimed at self-sufficiency, job creation, as in line with the federal budget backward integration program. The project, which has provided employment opportunities for many history communities, is expected to be completed in November 2026. Take a listen. After 2 failed attempts, work has officially commenced to get the 6 million metric tons Dangote cement factory in Ewekoro, Ogun State back on stream. The Dangote Group is leaving nothing to chance with this project, which sits on 533 hectares of land and comes with its own independent power plant. 2,000 tons capacity. Giving the project layout, the company's principal civil engineer says the new factory, to be completed in November 2026, will bring total production from Ogun State to 18 million metric tons per annum, making it the highest cement-producing state in Africa.
18,000 tons capacity. This is cylinder stores and refractory storage area. Yes, this is limestone storage, 300,000 tons capacity. Line A and B, that is the coal shed for storing coal, 20,000 tons capacity.
President of the Dangote Group, Aliko Dangote, takes Governor Dakwa Abiodun, members of the State Executive Council, traditional rulers, and other dignitaries on a tour of the factory. He thanks the state government for creating the opportunity to invest and for providing the necessary leadership, ensuring the dream becomes a reality.
This factory is going to create a lot of jobs because we have not only the factory, we have the mines, then we have power plant, and we hope before even November, while you are still in office, you will commission this plant by the grace of God.
Governor Dakwa Abiodun, who could not hide his excitement, equally commends Alhaji Dangote for trusting that Ogun State will provide a good business environment.
On behalf of the entire people and government of the state, we appreciate you. I can pledge that we'll continue to ensure that we provide, create, facilitate that enabling environment for the likes of you to continue to come and make Ogun State your home.
Dangote Cement is Africa's leading cement producer with 52.0 million tons per annum capacity across the continent, out of which almost 70% of production is based in Nigeria. All right, now to our first conversation. We see the political instability in Rivers State has become a significant concern, potentially affecting investor sentiment and the broader Nigerian equities market and other parts of the economy. As tensions rise within the state, investors are likely to reassess the risk environment, which could lead to shifts in market behavior. Political uncertainties, including changes in leadership, policy direction, and security concerns, have the potential to influence both domestic and foreign investment flows into any region and Nigeria as a whole. This discussion will explore how the evolving political situation in Rivers State may impact market confidence and the performance of the Nigerian economy in 2025. Well, let's see perceptions at this point. Joining us to unpack this, we have Mr. Olatunde Amolegbe, the MD CEO at the Stephen Asset Management, joining me right here. It's great to have you.
Thank you. Thanks for having me, Lady.
Yes.
Good morning.
So definitely quite the headline screamer, you know, yesterday with the state of emergency declared in Rivers. And we know how crucial that state is, you know, for oil production in Nigeria. So definitely when things like these happen, if someone's trying to make an investment decision somewhere, that might be flowing or supposed to flow into that state, already have investment there. But issues like this definitely sway perception. What are you seeing?
Investment is all about information.
Right.
The pricing of assets, pricing of any investment whatsoever, you know, takes cognizance of what is happening now and what is likely to happen in the future. And, you know, so people pay attention to whatever it is that is going on in the news at any particular point in time. That we've gotten to the point where, you know, what has happened in Rivers State has had to happen will be read in its various forms and permutations in boardrooms and in positions where investment decision making needs to be made this morning. So what I will say is that, you know, it is what it is. We are where we are. We need to just ensure, and I'm talking as a country now, we need to ensure that we are managing the information that is going out there in a careful manner, so that the key decision makers, particularly those ones bringing in investment from outside, all right, see these moves that had happened as efforts to stabilize a very, very crucial state and a very, very crucial region of the country. As I've mentioned, lots of oil assets, lots of oil facilities is out there, and a lot of the investments coming into this country is coming into that sector. So, so it is important that those people making those decisions see this as an effort to ensure that stability and security returns to that region, and that their investment, their existing investments, and the ones they are proposing bringing in is safe enough for them to be comfortable that it's still okay for them to come into Nigeria, and particularly to invest in that region of the country.
Right. And looking at the situation right now, what do you think could be some kind of boost, for foreign investor, sentiments? Because we are where we are right now in that situation as it is. But what do you think could calm nerves? Right now?
So for me, as a finance person, I tend to, sort of put myself in the shoes of a foreign investor or an investor of any kind, even local, that is looking to invest in a country. And obviously, I'm listening to news coming from the region I'm looking to invest in. And if those news, skew in a particular direction, I need to be sure that that direction is such that I'm comfortable with. So my advice at this point is that, obviously, luckily for us, our political leaders realize the importance of foreign investment coming into the country. They know the value it adds to the economy. They know the potential for job creation and other benefits. So they've made an effort to try and attract these foreign investments. It is important now that, as much as possible, that those foreign investors we are making appeals to do not see the news coming out of this country being focused so much on issues around politics, issues around insecurity and the like. I mean, they are happening, but as much as possible, you could also affect narratives. So I will implore our leaders to find a way of shifting the narratives towards focus on the economy, towards focus on poverty alleviation, job creation, and the likes. Because, I mean, those are the sort of narratives that, investors are comfortable with. They want to be sure that the leaders are focused on growing the economy and strengthening, our position as an economic power. But if what they are hearing on a continuous basis is about politics and the likes, it is likely that they are going to be skittish. Right. Even as a local investor, you are likely to be skittish.
Right, because we know how investors react, in most markets. Once it's bad news, they're unforgiving.
Absolutely.
They'll sell off.
Absolutely.
Immediately and run to safety.
Absolutely.
And, that's a loss of value.
Absolutely.
There for that asset class. But looking at, some of the, vandalism news, coming from major pipelines, I hear that's, been fixed so far. Are you seeing any risk for oil and gas stocks listed in the market?
There will most likely be short-term reactions because obviously, you see instant reactions. But typically what you also see is that if the news we are getting back is that, okay, look, that's the sort of damage we are envisaging is not as much, and that the situation has been brought under control, then you might see some clawing back. But clearly there will be some initial reaction. Medium to long term, people want to see what is being done to ensure that such a situation does not repeat itself, and that it does not become a contagion where you are now hearing news of such coming out on a regular basis. That could do significant damage. So you want to ensure that the reaction we see does not go beyond the short-term reaction, which is inevitable. It will happen. Medium to long term is for me more important. So we just have to ensure that we keep it keep the lead on it,
right,
and ensure that the news coming out of that place
that's a major forex earner, you know, for us, you know, oil exports at this time, and we already see that impact because we saw weakness, you know, for the naira, and definitely if we're not getting that FX the way we should, and you know, ramping up production, negative for the naira. We've been enjoying stability, you know, with the naira so far.
Our economy is anchored on the oil and gas sector. That is just the truth. Is the largest foreign exchange earner, all right, for this country, and it's probably going to be like that for a while. So protecting that is like, you know, you have a golden egg. You want to do everything you can to ensure you protect it as much as possible. So protecting it is just sacrosanct. We do not have a choice. So, as I mentioned, we will see short-term reaction. And we just have to ensure that, you know, it doesn't become a contagion, and, you know, the implication on the financial market and on the economy itself will be significant if this goes beyond, you know, the initial news we've gotten. And you know, thanks to God that we hear that at least there's some control, you know, being exerted in that area now.
And you know, it's quite interesting looking at the first quarter of 2025, you know, so far, and coming from the global economy to the tariff wars, seeing what's playing out in Nigeria, you know, right now when you're talking about political instability in that state, and most of the announcements we get from the U.S. At this point, geopolitics, still a big risk at this point. So it's almost seeming like 2025, is it the year to stay away from risk assets? Because now we're seeing gold, that's hit over $3,000, and seems to be inching more, you know, getting more comfortable in that $3,000 range. What are you seeing?
The fact is that there's lots of turmoil happening on both globally and, of course, as we see now, locally. And, you know, the market will react to this news. And you are probably right that, you know, any investor wants to be a little bit cautious and actually try to see the light at the end of the tunnel before taking a risk at this point. But I still think that at the end of the day, all of this will settle. I think a lot of what is happening, at least globally, appears to me to be a lot of realignment of interest, realignment of political focus. I think that ultimately we are going to see a settling. We are seeing the market react to those developments, which is expected. But again, you know, as investors, what you are going to see is a situation where while some says, okay, you know what, let me press the brake and take it easy, others will most likely see it as an opportunity to go in at the deep, and with the hope that, you know, things settle and they are able to make good returns. So you know, there's never only one single situation for every investor. So it depends on where you sit in the risk spectrum. So if you're a risk-averse person, all these uncertainties can't possibly make you comfortable. But if you're a risk lover, it could very well be that this is sort of situation you want to take advantage of.
Talking about risk and looking at the local bourse so far, Q1, year to date, still positive. That's for the all-share index. But the month of March, it's been quite bearish, you know, so far. I think it's down over about 2% for the month. Is that just, you know, regular profit taking, or is it some kind of bear markets trying to brew?
I think it's a bit of a whole host of factors. Some of the issues we've mentioned about global uncertainties and all of that probably has something to do with it, because I will assume that since the beginning of March, with all the uncertainties in the US and the global markets, it's very likely that we've probably not seen as much entry from FPIs as we've seen possibly in the last few months. All right, so that could have impacted the, you know, the dropping of the ASI as we've seen. Of course, local issues such as the one we've discussed there could also have something to do with it. The performance of the companies themselves, that we've seen, could also be impacting the performance for the month of March. But on average, if you look at it, the fact is that it appears the NGX is holding its own. If you compare it to peer markets, both in Africa and globally, the truth is that most global markets are already showing negative. Most of them are either in correction range at this point, or
like what we've seen with most of the indexes in the U.S.
In the U.S., yes. So
correction. But now is a bear market.
We are headed towards a bear market in the U.S. So, and typically the way the U.S. market goes tend to go most other markets, because significant correlation and a significant link among this global market. So so it's not surprising, but at the same time, I think the positive we can take from it is that at least we're still holding our own, and we're still in the
because I guess in some cases we've seen where a correction doesn't necessarily lead to a bear market.
Absolutely.
You have the correction, then you have some kind of recovery, then the bullish market continues. Could that be the case for Nigeria?
I think largely this is what I see. Because if you look at it on a sector by sector basis, you will find out that maybe just a few sectors, maybe about 2 sectors, are actually the ones dragging the market down. So broadly, the other sector seems to be holding firm. So if we are not seeing an across the market correction, then the chances that we are going to slip into a bear market is probably minimized. So we'll see. The market will do what it will do. There will be upswings and then corrections. So I think that there's really no cause to panic for now.
Right. And talking about panic, looking at some of the consumer goods stocks, listed, we're seeing the latest one for PZ Cousins. They had that vote, recently. They're trying to convert the loan from the parent company into equity, and that was voted against. How are you seeing that, what's playing out, with shareholders and minority shareholders?
Yes, I saw that news, and for me, there are 2 main reasons why minority shareholders will vote down such an effort to convert debt to equities. It's either they are dissatisfied with the conversion pricing, or they are dissatisfied with the dilution they are likely to face. In the case of PZ, it will appear to me that it's a combination of the 2. But if you also look at it from the other side, if the majority shareholder or management is saying that when things were very tough, the foreign shareholders have had to lend $40 million or thereabout to the local subsidiary in order to sustain its operation, because we know 2002, 2003, we know the conditions of the foreign exchange market. So it's very possible that at that time the local subsidiary was struggling to be able to get FX to continue to run its operations, and that is what led to the internal borrowing that accumulated into that debt of $40 million that they are now trying to convert to debt. So on the face of it, you will think that the international body is trying to essentially do a favor to the local subsidiary by actually agreeing to convert those debts to equities, because not converting them means that you are going to be having costs to continue to pay both interest and principal. And we know the exchange rate. You know what has happened with exchange rate. We've seen the result of PZ. You saw the significant devaluation losses they've been carrying. And except this debt to equity happens, it's likely that they will be carrying that revaluation loss for a while. And the valuation loss essentially have wiped out the shareholders' fund, if you will. But at the same time, you cannot also expect that the minority shareholders just accept conditions that could, dilute their value significantly. So
everyone's looking out for themselves.
Absolutely. So the two parties just need to find a way of sitting down and reaching an amicable agreement that works for both parties.
Right.
But on the side of the borrower, I think they are being magnanimous by agreeing to convert to equities. On the side of the minority shareholders, they are also just trying to get the best deal for themselves. So they need to sit down and sort it out.
And this is still on the back of FX losses. And, definitely, I'm sure when, subsidies was announced and, collapsing of most of our foreign exchange markets, I still wonder if, we saw this coming, for most of these companies, because it's been FX losses, ever since then. But now we're seeing stability, with the Naira. Do you think we're getting to a point where FX losses, big FX losses for these companies might become a thing of the past, or is there still risk?
I think that for those that are proactive and that are committed, if you will, to the country, some of them have taken some actions that has probably helped them to escape this issue of FX losses. I'll give an example of a Unilever, for instance. I think a lot of the backward integration they've done in the past had meant that they had not relied too much, if you will, on the need for FX to import raw materials and the likes, which means that they are not having to struggle too much with the issues of revaluation losses. So what I will expect some of the companies that are still committed to operate here to do is to gradually find a way of also increasing the local contents of their products in terms of raw materials, in terms of operational costs and the likes. So the more you do that, the more you do not need to rely on FX, then you could get away from the issues of FX losses with time. So it's really a need to change strategy. So if that is done, then down the line, yes, some of these companies could, avoid the need to make provision for FX losses.
Because I can imagine how much of a nightmare, FX losses are for most of these companies, and developing that hedge, definitely another headache.
Yeah.
Having to think of ways to hedge against such things. But still early days. I guess 2025 we'll see. Hopefully, the Naira continues staying stable, and maybe we'll see FX gains at some point.
At some point.
Thank you so much, Mr. Olatunde Amolegbe, as the MD CEO after Stephen Asset Management. Thank you for coming on today.
My pleasure, ladies. Thanks for coming.
All right, we'll take a break now. When we come back, other matters now. We'll look at Nigeria's banking industry and tech expectations. That's in a moment. Just stay with us. Welcome back. Well, a recent report by KPMG and Chainalysis, that's a blockchain research company, titled Crypto Risk and Opportunities in Nigeria, a New Banking Paradigm, provides an in-depth analysis of the rapidly evolving landscape of cryptocurrency in Nigeria. As digital assets continue to gain traction globally, Nigeria's unique position as one of Africa's largest and most active crypto markets presents both significant risk and promising opportunities. The report delves into the risk associated with crypto adoption, including regulatory challenges, security concerns, and the potential for illicit activities, while also highlighting the transformative potential of cryptocurrencies in reshaping Nigeria's banking and financial systems. Well, joining us to discuss now, we have Mr. Oluwaseun Odek, who is a partner, lead regulatory compliance at KPMG Nigeria. We also have Arushi Goel, head policy, Middle East and Africa for Chainalysis. Thank you both for joining us today. All right.
Thank you for having us.
Thank you. All right, let me start with you, Mr. Oluwaseun Odeku. Definitely, we know when people hear cryptocurrency, they most of the time risk, comes to mind, and there's also that underlying technology there, which is blockchain. And we see your firm is urging financial institutions in Nigeria to, adopt blockchain technology and also collaborate with crypto firms to unlock the potential of digital finance. So are the benefits outweighing the risk here, or are they somehow at par?
Thank you very much. I think when we look at the data that we have in the report, $59 billion being traded in Nigeria, I think the data speaks for itself. The volume is huge, and therefore this is something that we have to consider and look at how we can make the most of it. So whether we choose to adopt these blockchain technologies within a banking ecosystem or not, I think these transactions will continue to go on. So we think it's in the best interest of the entire system to look at opportunities that we can use to collaborate and use blockchain technology as well as trade crypto so that we can create a lot more transparency in financial transactions. Right now, those $59 million, most of it is it's opaque. You can't really see the beneficiaries of these transactions. You don't know what they're for. And so maybe bringing them into the same financial system will help to better understand the flow of transactions, to better understand, the direction of travel of cash flow. And it will also bring in all those involved in it into the financial services system. And then you can get more data. You can request for more KYC, and then also just root out the bad actors that are participating in this space. I think the blockchain technology in itself, it's immutable. You cannot change the data. It's in a public ledger. That kind of technology is very beneficial, especially when you're trying to fight financial crime. You can basically trace and track transactions as they flow. You can isolate transactions that have been linked to bad actors or that have been linked to fraud. And therefore, it also, that kind of helps the financial system better in the sense that you have a saner financial system. It doesn't come without its risk. There's certain risk, but I think with proper risk management, like has been done in other jurisdictions, I think we can manage those risks that are there in the use of crypto and blockchain technology.
Right, thanks for that. And let me take it to Arushi Goel now. She's the head policy, Middle East and Africa for Chainalysis. So, definitely risk, you try to mitigate risk as much as possible as any, business entity. Talk to me about how banks are mitigating most of these risks, in the financial services system, and this time from a global policy perspective. How are they navigating all of this? That's from the banks.
Thank you for that question. I mean, it's a very pertinent question in today's environment, right? So as crypto has grown, a very important part of that crypto ecosystem is banking services, right? All your exchanges and other service providers, they need banking services for very baseline requirements like paying salaries or paying rent, etc. But they also sometimes need banking services for client money accounts to settle transactions when they're off-ramping or on-ramping into the crypto ecosystem. But traditionally, the banking side of the ecosystem has actually de-risked itself by not providing those services to the crypto ecosystem, partly because of the lack of regulatory clarity, and sometimes partly also because of the lack of sufficient capacity in understanding what those risks look like and how to kind of manage or mitigate them. Luckily, like you mentioned, how the global policy is moving, we are seeing a shift, a very positive shift, which is banks, regulators, and even the global standard-setting bodies are realizing that we cannot just ban crypto exchanges or crypto from our jurisdiction. We need a sufficient oversight over these players to be able to manage that risk. So really, we're moving from de-risking to risk management and mitigation. In terms of how banks are doing it, it's really, through the use of blockchain analytics, right? What blockchain provides is a level of auditability and traceability that is simply not possible in traditional finance. Because in a blockchain, you're not just looking at your direct counterparty, but you can look at the parties a number of hops down the line, where the transaction originated, who all did it touch in between, where is it finally culminating. All of that is visible on a blockchain. You can have almost real-time monitoring capabilities when it comes to crypto. And that's where banks have a lot to benefit by actually leveraging the same technology from which they've been hesitant so far to kind of understand what their exposure is. And also there's a bit of a nuance there, is understand the exposure, but also understand what part of that exposure is risky and what part of that exposure is not risky, because that will really help define the rules of the game for the industry and eventually help everyone thrive responsibly.
We know the crypto industry is one that's plagued with a lot of scams. Looking at crypto scam revenue, that's according to your report, you see rug pulls accounted for about 4%, pig butchering 33.2%, high yield investment trading scams about 50.2%. Then we have other types like the crypto drainer, address poisoning. So looking at that's a lot of scam revenue, about $10 billion in 2024, and your report also says it could be more. So it seems it'll be quite tough, to get banks to actually partner with some of these crypto firms. What do you think, Arushi?
Yeah, thanks for highlighting that data. I think typically there's a very negative sentiment attached to the sector, but if you really look down at the data, once you start to dig deeper, it's really not as bad. Let me clarify. We research on crypto crime every year, and almost every year for the past couple of years, what we've seen is that consistently, crypto crime has actually been less than 1% of all crypto activity. So really, 99% of all crypto activity is not illicit. It's just the 1%. Even though it's a fairly large number, last year in 2024, we estimated this activity to be in the ballpark of about, I think, $45 billion, right? It's still a large number, which is why the need for appropriate risk management tools. When it comes to scams, it's a persistent issue. It's a growing issue. Like you said, $10 billion being received by scam addresses. This is a lower bound estimate. We will likely revise this number upwards in the coming year. 80% of those scams are investment scams and pig butchering scams. And we are also seeing AI, for example, emerging as a threat vector when it comes to scam activity. So all of this eventually tells us that banks, financial institutions, and the regular users are already exposed to some level of criminal activity when it comes to crypto. So having the right guardrails where legitimate businesses have a platform to flourish, where users have access to regulated exchanges, for example, where there's appropriate data collection from the bank side as well as from the regulator side. So once we have that ecosystem starting to build out, also on the law enforcement side, being able to coordinate between regulators and law enforcement so that if there is a complaint, it's kind of acted upon as quickly as possible. Within crypto, speed is of utmost importance. So being able to, in a fast and effective fashion, cater to some of these activities is where the transparency of the blockchain is highly, highly useful.
All right, thank you for that. But let me come to Mr. Oluwaseun Odeku now. So looking at the data there, we see Nigeria leads most of sub-Saharan Africa when it comes to countries by crypto volume. So definitely there's adoption there. And we've had, from the CBN, that's the previous leadership in the CBN, banned banks, from carrying out crypto transactions, but we still see adoption, growing, from then even up till now. What do you think is driving that?
Okay, thank you very much. I think a lot of it is being led by people looking for alternative systems to carry out financial transactions. There are quite a lot of restrictions with inter-country transfers. Crypto kind of reduces those restrictions. When opening domiciliary accounts, there's a number of KYC requirements. A lot of the crypto exchanges don't have similar restrictions. And so you see that naturally people are gravitating towards that. I think there's also the macroeconomic issues that we've had in the country over the last year or thereabout. People are looking for alternative store of value for their assets. And then you also have the inbound remittances. One of the things you see is with the traditional money transfer system, especially for inbound transfers into Nigeria, there are certain jurisdictions that are, due to the different sanctions regimes, are unable to enjoy that traditional money transfer system. They then revert to crypto. If I'm to take countries like Russia that has been sanctioned heavily, you can imagine a Nigerian who is in Russia, who is trying to send money to their family in Nigeria. They will most likely just lean towards using crypto because of the sanctions restrictions that they may face. You also see the cross-border transactions, especially within Africa. There are typically a lot of issues when you're trying to buy from someone in another jurisdiction in Africa and you want to transfer those funds. It can be very expensive. Crypto provides an alternative for citizens of those countries to transfer value. I think there's also the investment side to it that's been appreciating. It's appreciated for a bit. It's also depreciated for a bit. So you also see that people use it to store value, it's just it's almost people find it more convenient, so to say, and I think that kind of also supports the argument that the earlier it's regulated, the better, because we then begin to see a lot of the transactions that are currently happening outside of the system that are not properly captured. Then those are captured in a regulated space. Proper KYC is enforced. That can lead to better transaction monitoring. That can even lead to better identification of bad actors. And that can also be a good source of revenue for the government. For example, in South Africa, there's the crypto tax that you get on the gains on crypto. That is, as the country is also looking for revenue sources. I can imagine the level of appreciation in assets, in virtual assets held by people that have gone untaxed over the years. So those are ways. I think it's just a convenient environment for people to do transactions, especially cross-border transactions. It helps to eliminate a lot of the limitations you have with the traditional banking system.
On some of those crypto transactions and crypto gains, do you think that might dissuade, the players, in that market? That might be something they won't be happy about, getting some of their gains taxed. Do you think that might push them away?
Well, I think when you look at the volumes, we're in sub-Saharan Africa, Nigeria is clearly way ahead of everybody. So the volumes have been consistent, and the number one spot in Africa has been consistent over the years. So I don't think it will dissuade people. I think just creating a regulated environment will bring a lot of intelligence to both the regulators and as well as the regulated. It brings a lot more people into the tax net. I think it will. I don't think it will dissuade people from doing transactions on crypto.
All right, so Arushi, definitely we're seeing technology, moving at a fast pace, so far. What are you seeing in the next, 5 to 10 years for blockchain adoption with financial services and most of these banks?
Yeah, I think 5 to 10 years is way too long a horizon to be able to calculate at this time. But generally speaking, in terms of trends, we are obviously seeing crypto adoption on the rise since the last few years, and we expect that trend to continue. What's probably going to be more positive is the fact that we have somewhat more clarity in terms of how the policy environment could look like when it comes to especially the likes of centralized exchanges and those kind of service providers, which is leading to a safer environment for the users. So that's definitely something we are going to continue to watch. Just like any other sector, just like with the traditional financial sector, as the adoption grows, so does the possibilities of more kind of crypto criminal activities. And therefore, that's where we see a lot of technological innovation take place, right? For example, right now, we are a lot more focused on the compliance and then kind of being reactive to when a certain criminal activity takes place. But we expect the technology to move in a way that we are not just reacting, but we are being more proactive and preventive in nature, which is being able to understand suspicious patterns so that we can take action even before some of these criminal activities take place.
All right.
And of course, AI will continue to have a role as all of these.
Yeah, we definitely cannot escape AI at this point with most of the conversation. But thank you so much, you both, as Oluwaseun Odeku, who is a partner lead regulatory compliance at KPMG Nigeria. And we also had Arushi Goel, head policy, Middle East and Africa chain analysis. Thank you both for coming on today. All right, so yes, thank you. All right, let's get a check on what's playing out in the global scene. Now we have John McCall with all of those details right now. Do we have good news?
Good news is no news. Bad news is what you have as news.
Wow.
Yeah. All right, good morning, everyone. Welcome to the global news segment of Business Morning. And we'll start by telling you that General Motors and NVIDIA have agreed to strategic collaboration that includes the automaker using several products. And as Ladi was just talking about, artificial intelligence, it's at the heart of it. So there'll be artificial intelligence services from the tech giants for next generation vehicles, advanced driver assistance systems in factories. And the companies announced that the new initiatives include building custom artificial intelligence system using NVIDIA compute platforms, including Omniverse with Cosmos for optimizing GM's factory planning and robotics. And then from there, we go to the metals market. As we'd expect, the Trump tariff impact is still on. The silver market faces mounting stress as trade war concerns intensify with higher rates to borrow metal, adding to signs of global dislocation, and a surge in lease rates for the precious metal has become the latest sign of alarm, with anxiety building over the impact of foreign tariffs from the United States President Donald Trump that sparked a dash of ship silver into the U.S. in a bid to capture premium prices in New York, possibly causing a squeeze in London. Precious metals, gold as well as silver, have been upended this year as Trump challenges the global trade order, and that spurred demand for havens. And we saw, of course, gold has hit a record high twice in less than a week. That's part of the reaction to the Trump tariff. And Turkey is not having it easy. We've seen a drop in the lira. It sank, and also there was a massive sell-off at equity that triggered a trading halt. I can't remember when last I saw that or heard about it in reality. Well, that has happened in Turkey today, and government bond yields have surged to the highest levels this year as investors dump the nation's assets after the arrest, this is at the bottom of it, of a key rival to the president there, President Recep Tayyip Erdogan. This has raised political risks, and the benchmark Borsa Istanbul 100 index lost almost 7% in one trading session, triggering a trading suspension under the exchanges. You know, there's this rule that has been placed digitally that when they sell off up to a level, you know, trading will be halts. So that's what happened in Turkey. We haven't heard in a while, but very dramatic escalation there from politics to the markets. From Turkey, we go to South Korea's housing transactions. There's a plan there, fresh plans to curb housing transactions in Seoul. That's the capital, as acting president Choi Sang-mo vows to take all available steps to prevent a frenzy in the property market that could potentially complicate efforts by policymakers to shore up the economy. The government has said that it would designate the districts of Gandam, Chio, and Songpar in the capital as areas where apartment buyers must seek permits, and the Ministry of Land, Infrastructure and Transport said that a number of areas may increase if the housing market overheats and regulations on housing rules will be tightened. And from there we go to India. The bonds market, global funds are set to boost their holdings of Indian bonds in March by the most in 6 months on bets of further interest rate cuts by the central bank, even as they exit local equities. Foreigners bought $1.8 billion of rupee bonds this month, and it's not over yet, although higher than any other month total since September. This, they say, is in contrast of global funds that have sold over $2.8 billion of stocks. So they're moving from the stocks to bonds amid concerns over slowing economic growth and high valuation. So no wonder we've been seeing the Nifty 50 in recent times in the red for almost all the trading sessions for about a month now. And still in India, India is about to join the worldwide wave of steel protectionism, outlining plans for sweeping trade tariffs just a week after President Donald Trump slapped duties on all of U.S. import. The global steel market is facing upheaval as multiple nations put up defenses to fight flood of metal, particularly from the billion-ton producer, China. India's Commerce Ministry has proposed temporary safeguard duties of about 12% on a wide range of steel products. Safeguard measures are used in times of increased unfavorable and unforeseen imports that cause or threaten to cause permanent damage to the domestic industry. So each country protecting itself is the loss of the world. And in Indonesia, for 3 weeks straight, Marina Budiman is the richest woman in Indonesia, richest woman. She has become roughly $350 million richer each day by mid-March. And the president, commissioner of Indonesia's biggest data center operator, sat at $7.5 billion fortune after her company's shares repeatedly soared by the daily limit, making her the nation's wealthiest. Imagine becoming the wealthiest in 3 days. Then the stock of DCI Indonesia crashed in just 3 days. And of course, her net worth crashed with it. Lad, it is a prayer that you must do. Right. I mean, she became rich, you know, just by buying the shares, and everything was looking fine. But in just 3 days.
3 days.
All of that crashed.
She lost $3.6 billion.
I tell you.
Wow.
Lady,
I can imagine.
That can do something to the mind.
I can't imagine.
I don't want to imagine
how she feels, because I know when you lose 20K, I know how you act. But that's fine. That's fine.
I'll get you.
Right. Thank you so much, Edie, for giving us the details there, what's playing out in most of those markets. So that's it. The trade is still on right now. By 1 p.m. on Business Incorporated, we'll bring you up to speed on what's playing out with most of the markets that we track. Thank you for watching. I'm Lade Williams from me and the team right here at Channels HQ. It's bye for now.